Hello, students. I hope things are going well. Things are going well for me. Um, I see some of you have gone in and looked at problem 5-22, and so I want to talk about 5-21 for you. Uh, your assignment for Monday is going to be problems 24 and 25. If you'll do those assignments and then take a picture of your assignment and then email it to me. And what I'll do is I'll do those on paper. I don't have a printer here, so I'll do them on paper, and then I'll take pictures of you and send you my pictures back. So that's how we'll handle 24 and 25. So I will not do a video on 24 and 25, and I'll send out those two statements to you probably on Monday morning, at some point on Monday morning. So, all right. One of the things that we have to do is in terms of this, one of the things that we have to do is we have to record our sales at the amount of that we expect to get. And that's why when you saw as we did 5-22 on Thursday night, you saw that we recorded sales at the net of the early payment discount, at the sales discount amount, rather than at the gross sales amount. We're going to see that same idea in terms of these sales returns and allowances. That we're going to set up an account, actually two accounts, to take into account the fact that we're going to receive some sales returns and allowances. And so you'll see those two new accounts as we do problem 21. All right, so let's go ahead and start. I'm going to put these up on the board. Please be patient with you. I lost my person to hold my phone, and so I'm going to talk and shoot video at the same time. I know that's not very convenient for you, but please be patient with me as we try to do this. Okay. Okay, so the first transaction says sold $16,000 of antiques on account. Credit terms are net 30. In other words, there is no early payment discount, and the bill is due within 30 days. Okay, so sold on account. So accounts receivable for $16,000 and sales for $16,000. The next transaction, and the cost of goods sold is $8,000. So remember, when we do a sales transaction, we actually need to hit 4 accounts. This is important for you to remember. And the cost of those sales is $8,000. In other words, the inventory cost is $8,000. So we're going to debit cost of goods sold and credit merchandise inventory, because if we sold it, that merchandise inventory has now is no longer our inventory because we've sold it. Okay, so there's the first entry. The next entry is received $300 sales return on damaged goods from the customer. Cost of damaged goods is $150. So here's where we're going to see this new account being set up. We're going to set up an account called refunds payable. For $300, and accounts receivable for $300. In other words, we're going to decrease our accounts receivable by $300, and we're going to debit this refunds payable account. If you'll notice when you read page 263 and 264, they talked about how at the end of the year, we're going to set up a refunds payable account that's a credit account that takes into account what refunds we expect to make throughout the whole year. So this is going against that refunds payable account that we set up at the end of last year. And my second entry, because remember we have to do 2 entries, is to merchandise inventory for $150. And my credit is estimated returns for $150. This refunds payable account is a balance sheet account, and this estimated returns is an income statement account. All right, the next entry. Antique Mall received payments from the customer from the customer on the amount due from January 4th, less the return. So here we're going to take the $16,000 minus their $300 return. And so I got cash here for $15,700 and accounts receivable for $15,700. Okay, the transaction on the 20th. I sold $4,900 of antiques on account, credit terms 110, net 45, FOB destination. Cost of the goods is $2,450. So again, we're going to record this sale at the net amount, the amount after the discount. And so we're going to have an account receivable for $48.51. $48.51. In other words, 49,000 times 99%. And sales for $48.51. And then the second entry, remember this is sale, so there has to be 2 entries here. It's my cost of goods sold. My cost of goods sold. And that was for $2,450. And my merchandise inventory. All right, again, that's these 2 entries now for that sale. All right, remember when we talked last in 5-22, we talked about how freight in went to my merchandise inventory account, but freight out goes in its own separate account because it's a selling expense and not an inventory expense. So this next one we're going to call freight expense for $70 and cash for $70. And finally, we received payment from the customer and they paid within the discount period. So it's going to be cash for $48.51 and accounts receivable for 4851. All right, class. That's E5-21. Please do, I think it's 24 and 25. Let me check just to make sure it is. It's E5-24, E5-25. A format that you should follow to do E5-24 is the format on page 469. And the format to help you with E5-25 is on page 270. Again, take a picture of those with your phones and email them to me, and I'll email the answer back to you sometime Monday morning. If you have any questions, please email me. Please email the whole class so that they can get the benefit of your question. I hope things are going well. I hope you're making good use of your time and accomplishing some projects that you hadn't been able to accomplish up until now because you've been busy with school. Stay safe, and I'll talk to you or I guess I won't talk to you on Monday, but I'll email you on Monday. Also, I'm going to post your grades for test number 2 on Canvas this afternoon. So be watching your Canvas accounts and you can see how you did on the test by looking at your Canvas accounts. All right. Enjoy your Saturday. Bye.